Good morning. Okay, so what we are going to do is we are going to go in with the highest probability statistics and probability levels on the NASDAQ chart, and then we will, finish our workflow process for the week and go from there. All right. So let's see. Can somebody hear me? All right. Good morning, Zulu. Can you hear me? And somebody confirm that they hear me. Good morning, Costa. Can you hear me?
Yeah, hey Mickey, how are you?
I'm good. Somehow my daughter's got remote learning today because of some hurricane that's maybe miles away from us.
How far is it away?
It's very, very far.
Oh, you're good then.
It's windy. All right.
It's sorry.
Go for it, dude.
Okay. Just been a bit busy this morning. I think you know why.
Yep. I'm sorry to hear that as well.
Yeah, no worries,
I was
mate.
shocked that she even came on here.
Well, I've got
But,
lots of stuff I have to do later, but I'm here now and I want to do this, so it's good for me.
okay. Sounds good. In that case, let's get it going and, let's jump on a call later. Want to make sure there's nothing I can't do for you regarding that.
No, we will. Thank you, Mickey. Appreciate that. But we'll do.
Okay. So looking at our daily chart right here, you can see we have the previous month 50%, the previous month ranges, but we're mainly focused on the previous month 50%, and then the current month's NFP Friday. We can see that we are above both of those. Current month 50% is right here. This month's NFP Friday is right here. Above both. We're coming in on the last trading day of the month.
Yeah.
Why is today the last trading day of the month? Because orders placed, let me check.
27th.
Yeah, orders placed today will be cleared and, sent to the prime broker and all that stuff on Monday. So any orders executed today will be cleared and settled and all that stuff on Monday. And then Monday being the 30th will be the first trading day of the month because orders placed on the 30th will be finalized, cleared, and settled and sent to the prime broker on the first of the month. So the actual first trading day of the month is actually on Monday from a life cycle of trade standpoint and all interest booked. All right, so now we know going to the weekly chart.
Yep. Extended.
That we overextended 3.89%, and we are going to start expecting when we listen to Bloomberg, when we listen to CNBC, when we listen to any news, we're going to expect doubt in their mind and the possibility of a slowdown, a possibility of a recession, inflation spiking up. You guys will notice these things as you do your systems long enough, and when you're really in sync with the quarterly move, right? Like try it sometime. Like when we're extending throughout the month, we're above NFP Friday, previous month 50%. You listen to the news, there'll be things about like Apple and Nvidia this and like China doing QE and all this positive news, and then like when you start seeing it slow down because we get overextended, like this is what's NFP Friday, this is week 1, week 2, week 3, we get overextended by 4%, and this whole time, if you're listening to the news, you're gonna hear doom and gloom. And you even start seeing it on your Twitter now, right? Same with this right here. This is week 1, week 2, week 3 of the month. We get up to 3.89%, and we go into a 3 weeks or a 2 week slowdown. And people, like, your news will just chatter. You think for sure we're going to crash and burn. Same thing here. Week 1, week 2, week 3, we get overextended by 3.4%. We start slowing down. Seasonality, right? And this is when we get below on the daily chart, the NFP Friday in the previous month, 50%. What do we target? Quarterly lows.
Yeah.
Right? During this whole time, if you're listening to the news, which, like, I'm a sucker for. I love listening to the news. I don't know. Maybe I'm an old soul, but, like, it's quite entertaining when you see this play out. And I'm wearing my tinfoil hat, but, like, try it sometime. Week 1, week 2, week 3, week 4, we get overextended. 3.24%. We slow down. Week 1, week 2, week 3, we get overextended by the constant variable.
Yeah.
6.19%. What do? We slow down. We let everything catch up. We let everything fix itself. And then obviously this last summer seasonality pullback. So on these pullbacks, like right here, yes, you're looking for quarterly lows. Right here on this pullback, you're looking for quarterly lows, right? And how do you know, like, this is one of the reasons I listen to the news, right? I'm not saying it gives me any edge on the intraday trade space whatsoever, but, like, 7 o'clock Eastern time, you start hearing about overnight stories of, you know, like on Bloomberg, like, you'll know when it's a bullish scenario and when it's not, right? And then one other thing I would like, it's good for situational awareness in the markets, that just training your ear on, that has helped me. Not saying it has to help you, but paying attention to this low number right here. And when people talk about it, the 0.25%. So we're down on the NASDAQ 0.26%. You know, like, how always like listening to that. But anyway, we can see that we went up 4% on the weekly chart compared to, and I still need to put that Z score on here. You can see that we're overextended for the last trading week of the month. We're trying to let this catch up. Because remember, when we're pulling back and slowing down, we're slowing down like this to let things on the actual workflow side of the house fix itself and get caught up from this move right here. When we do stuff like this, this is just a quarterly pullback and a buying opportunity. We pay attention to the weekly chart and those quarterly lows, because that will determine if this is just a seasonality pullback. This is a lot easier to see on the daily.
It's like as if when it kind of gets up there, it's letting a bit of air out of the tire in a way, a little bit of pressure out during that sort of easing off.
Which is, this is a healthy pullback, right? And what did we do? We went to quarterly lows. We got below NFP Friday. We had daily closes below previous month 50%. We go to quarterly lows. Same thing during this time. We get below NFP Friday. We have daily closes below previous month 50%. Where do we go? Quarterly lows. Right? All these other ones are just normal pullbacks, right? So I view them as such. These buying opportunities for the quarter, these are just buying opportunities for the month. But at the end of the day, they're just slowdowns, right? When we're in here, we pay close attention to what kind of pullback we're going to have. Are we going to have a monthly pullback? Or are we going to have a quarterly pullback? And then, you know, when we do stuff like this, it's actually quite obvious. And God forbid you listen to the news on these times when Russia and, you know, all this stuff, inflation. So this weekend, right there. Will you make that favor and look up NFP Friday for, I don't know if you have it on your spreadsheet, for the month of December?
I can get that for you. 1 sec.
I think it's the 3rd. I want to say it's the 3rd. Yeah, it should be the 3rd.
December 22, right?
Yeah.
Yeah. Get there. It was the 2nd, Friday the 2nd.
And what about November the 21st? So now, we've talked about the monthly pullbacks, we've talked about the quarterly pullbacks, and then now we're going to talk about how to actually measure and make those decisions when we have a deeper pullback.
Do you need the NFP for then? Or you got it there? Yeah.
All right, so we have daily closes below previous month 50%, and then we do that limbo land crap that we just actually experienced ourselves, right? But on this month, we get below NFP Friday right here, right? And so obviously we're below previous month 50%. We're below NFP Friday until this NFP Friday, this NFP Friday. Once we got below here and daily closes below here, we're targeting what? Quarterly lows right here.
Yeah.
When we get to the quarterly lows, conveniently, it's at the end of the month. Pay attention to that. Go do your own study on that, and because it'll do nothing but help you. But then, right, we get a new month, and just like we've seen over the last 2 years, every time we hit quarterly lows, NFP Friday is usually the launch pad for it to be bought up. If you aren't paying attention to the news, they can't. Right there. Right? So right here, we get below previous month 50%.
Yeah.
And we get below NFP Friday, we instantly look right over here, right? We get below there, new month opens up, right? Our first eye goes to this previous month 50%. Can we close above it? To this point, we're thinking the typical bid it up, right? Wait for NFP Friday. Remember, we're looking at until this new NFP Friday happens. We're looking at this NFP Friday and this previous month 50%. We see that right here, we're rejecting it on this date, and then the next day gaps down, right? NFP Friday happens, establishes the range, we start going up for it. We still can't get rid of above previous month 50%, and then we do this little swing down. This is how you know that we're going into something more serious than just a monthly or a quarterly healthy pullback, right? And then if you measure this, right, this month ended 21% to the downside off the highest for the year, right? So that wasn't a teller. I don't know what is. Anyway.
Yeah.
So now we're above previous month 50%. We're above NFP Friday. We expect to look for the low of the day between 5 and 8. We know that we're overextended on the weekly chart at 3.74. Yes, we can still move up if we want to today. We've got all the way to right there if the market wants to, right? But we're going to be looking for the low of the day between 5 and 7, right? Now we're going to go to this chart. I need to redraw these on so they appear on my other charts. Right, this is Sunday's. ICT community uses Sunday open and price in that gap, weekly opening, new week opening gap, right? To make the determinations. Like a lot of them use them for targets and see responses levels. I use it just to see, hey, did we swipe below it and go back above it? And does that establish the low of the week? DR community uses the Tuesday price. Do we swipe below it and find support on the low, the midpoint, or the high of it? Yes, we do, right here, right? So it's safe to assume that since Tuesday at 10:30, the low of the week has been in. Let me redraw this out. Go to, if I don't today, I will never. For me, I like to manually draw this out. To just like, there's a difference between, like, I love people who do automated things, but I was talking to my buddies the other day about this. You know, like I have a lot of friends who can code and build things automated. I can't, and like people told me, like I've got plenty of people that were like, we can literally automate this whole process, and that way you don't have to do it. And it's like, that's really cool. That'd be cool to have, you know, to double check my work. However, there's power in doing it manually because you pick up on little nuances.
If I may say something.
Yeah, go for it, dude.
Yeah, for me, like on that, it always starts with a manual process. And if it's data or it's something visual you're after, you have that sample, and then that tells you whatever it is it tells you. Then I will write code, and I want the code to agree with what I've seen manually, right? To kind of prove that over a bigger sample. That's kind of why I do what I do.
Yeah, but like for me, it's like I like doing this manually because I'm still at this stage where, you know, I'm manually trading.
Yeah.
So like doing these morning routines, like I pick up on little nuances and detail that, you know, a code couldn't pick up on.
Yeah.
And so if I'm pressing the button manually, those things actually, believe it or not, come and stick in your mind throughout the day when stuff's like moving fast, you know?
Yeah.
Like, so we expect the day low to be between 5 o'clock and 11 o'clock in the morning, right? We can safely assume that the weekly low is in. And so now we're going to move to our next part of it. And this is one thing I've been messing up. And so this was up here yesterday, based off of the thought process that, you know, we had long probabilities, 56 and 55. But then as yesterday, and I've been messing this up all week, right? First and foremost, I noticed that the range of this range indicator was more accurate than the VET, and the VET was opening or updating at the close of that day. So it wasn't maintaining proper accuracy. But the next thing I was messing up is I was doing extreme to extreme. right? It's saying that the extreme of the day would happen between 12 or 8 and 12 to the downside, and the extreme of the day would happen between 12 to 1600. However, that's not the case, right? Yes, and this is some back testing I'm going to do, but yes, we got all of this part of the move right, which is fine because this is going to update live during the day based off of what New York is doing. Like if we breach these OU lines, remember we talked yesterday that the probability shift based off of what the 930 and 1030 does, the probability shift of what this 12 to 1600 range is going to do. But the one thing I keep messing up is I keep thinking that this is going to be like thinking through this, right? We moved up 300 handles and we moved down 300 handles, and there's 600 handles in one day. So realistically, on a non-news event day, it's pretty safe to say that moving 300 more handles plus 500 handles back up was a pretty stupid mindset. But I did understand. So like we're gonna be more aware of where we place this 12 to 1600, and we're gonna start doing some afternoon probabilities, and I'm gonna back test that a little bit more. All right, let's remove all drawings. So go into today. Market clues, right? We put this on today, right? Generating market information from the overnight session. So far, we have not been able to get above this previous day midpoint, right? We haven't taken out the lows right here, 1 and 2, right? And we haven't come up and filled any of them. We haven't returned back to the 930 or 1030 yet, right? So, but the one clue that it's given us is right here. This previous day mid. All right, going back to the 12-hour. All right, let's put in our time-based probabilities. Midnight, settlement, and Globex open. And why do we do Globex and mid or settlement? Because there's certain times that we will gap the two, and like I want to see the relationship difference between the two. The settlement, which is at 1615, and then Globex open, which is at 1800. All right, let's put our midnight snap indicator on. It will draw out settlement for us, which is right here. And a little fun assignment that you can do for these time-based probabilities, like using midnight snap. What you can do is you can figure out what if we're traders between the primary trading happens between 8 and 12. So if the primary trading happens between 8 and 12 for most people, then I need to know exactly what hour that settlement time happens at, right? So we can go 08 to 09 for a settlement. This is jacked up. This did this to me yesterday too. I need to reach out to Austin for this. Oh, there we go. So that should be on the 15-minute. So we get the right amount of data. When you see, this is something that's jacked up about this settlement time. So this is on the 15, 16, 15. Okay. Either way, I don't know if this number is actually correct, but as long as the calculation, it's doing its job, I'll see the increase and the decrease from each hour. But we're looking for settlement, so 8 to 9. You can do this for any time of the day. You can do this for any time frame. Now we're going to go 9 to 10. What happened to my damn drawing? It just disappeared. We can see 9 to 10 head. Okay, so. Oh my gosh. So annoying today. Alright, so from 8 to 09, settlement has a 28% probability of being returned to. 09 to 10 has a 35%. And these numbers are wrong. I'm just seeing which one has the highest increase. Something's about this 1615 on the 15-minute. Let me put this on the chart and see if that helps.
Yeah, I got the same numbers as you.
Yeah, but the midnight snap does something is glitching on it.
Right.
I don't know what it is. Electronic trading error. Readjust. All right, so now we're going to go 9 to 10. We have a 35%. And here is my fucking drawings again. 8 to 9, 28. %, 9 to 10. I'm gonna have to go do it again because
yeah,
oh yeah, right here, 35%. 10 to 11. I should erase it again. I need my coffee. Anyway. It does not like 36%. Wow, that's weird. So we can see that the highest probability, and then if we do 11 to 12, we get 27%. So we can see that the highest probability right here, and if we did this a little bit more detailed, the highest probability of this settlement being returned to is going to, we can safely assume, say 9:30 to 10:30, because that's when the volatility is really happening. So you literally break this down by the half an hour.
Yeah.
We also know, so we know that the settlement highest probable return is from 8:30, 9:30 to 10:30, right? We know that midnight is from 8 to 9 o'clock if we do the 8 to 12 and so forth, right? All right, so let's put this back on. 08 to 12. Let's do midnight. We gotta keep the ball going. And we will do 1800. What's that?
It was 319 is the number. 2319 if you want midnight.
I'm not putting the times on right now. For these ones, only do that for the other ones because these ones just know where they're at. Yeah.
Yeah.
Okay, so now we've got a Globex open or midnight or settlement on. Now we're going to switch over. We're going to take our fib. We're going to place it on settlement. And then we're going to go down and make sure you are on the left side in yesterday's area. You're going to drag it to where price currently is at, right? 25, 75. Because if you have it over here doing, when you make the switch to RTH, it's going to disappear.
Yeah.
Right? And you got to realize this fib will continue to move until 9:30 actually happens, right? So throughout the first, from now to 9:30, we're going to move. If it drops all the way down here, we grab our fib and let's say the 9:30 opens up down here, we grab the fib and we come down. Right now, we're just going to put the probabilities into this, right?
Yes.
So it's a Friday, right? And we've got the fib, what settlement is and what current price is, right? It's 25, 50, 75, 1, 0, wherever price is, 25, 50, 75, 100% of the fill, right? So starting with 25% of the gap retracement, we can see that that happens 61% of the time. All right.
Switch
So
to
that
red.
is going to be right here on the green. What does he mean the chat is off? I don't know what you mean, bud. Can you guys hear me in the audience?
I'm just
You can't
checking.
hear me?
I'm not seeing any comment about chat being off. This is further up.
No, it's at 6:02. Sapphire Trader, we good? Can you hear me? Are you fucking kidding me? Have we been doing this whole thing? Muted?
Oh, we've got comments to say audio is good. Rafa has just said yes.
Oh, okay, good.
Yeah, we're good.
Okay, good. All right, cool. All right, so now we're going to do 50%, put our gap data in, 50% of the gap being retraced to on a Friday. We can see it's 15. 1 minute, I just checked this up. Going back to 25%. Sorry, guys. I'm fumbling a lot this morning.
You haven't had your
All right,
coffee.
we said this 25% isn't 25. It is actually 61. That's the 25% mark for the gap.
Yeah.
We know that the 50%, 59. So that should be at the blue line.
Yeah.
And then the 75%,
54.
that can't be true. That's got to be higher than the 50%.
Why am I wrong? You've got
Because
54.
the closer to settlement, this is going to be the 75. The farther away from settlement is going to be like, yeah, oh yeah, I'll check that out. You're right. All right, real quick, let me put this in. 75, 54, you're right. So let's say right here, let me go back to electronic trading hours. Let's say right here, right, price comes all the way down here, opens the 930 here. This would be 25% right here where the 61 is. This 50% would be 59, and this 75% would be 54.
Yeah.
Yeah. That makes sense. Yeah.
Yeah, it does. Yeah.
So you're right. Because this is a 75%. So back to placing this on our chart. So current price is right here, right at the 50% of the 12-hour cycle. Let's see what we want to do. Right? So freaking crazy how that happens. Right? So throughout the morning, like I'll be dragging this up and down, and then at 9:30 it anchors. I adjust my numbers, and then I have the probabilities of these gaps being filled. All right. So for now, it's right there. All right. So now we've got that. We're going to move on to our structure-based probabilities, which is right here. And let's draw the numbers in. And somebody asked me how they can collect the data for this. And I told them that what you do is you go to a 15-minute chart and an Excel sheet, and you mark out all the overnight session in 15 minutes. And then you start collecting data between the 15-minute close, so like this 15 minutes at 18:45, and then 19:45 comes down and takes out the low. Now, you look until 16:15 that trading day, does it return to that, and just collect all the data for that. Right. So now, this is going to be So real quick, let me do this part.
I'll have those numbers whenever you want them.
One minute.
Yeah, no worries, mate. That can't be right.
Oh, so structure stat 1, 1815 is 87,
Yes.
right? And then the low of this 12-hour cycle is at 345, and that is 79%, right? So let's put the numbers in. 79 at. So nothing I do is discretionary, right? Because I don't believe in discretionary decision making. I believe that decision making is the most powerful thing that you will do in trading. But as you can see, my process is purely statistical based and repeatable. It requires no information. It's all based off of stats, right? And that's just what makes me feel comfortable about following my process. Right. So now we're going to turn on our one setup for life by MK, right? And we see that Asia was a short that turned out to be a false, and then breached at after 2 o'clock, right? So we're going to put that in our database.
Yeah.
Sorry. I can't wait to get on a call with you and talk about these daily candles.
Yeah, we'll talk about that. Yeah, I chucked that data for you. You've seen that, so
yeah,
some good ideas there, I think. Sorry about yesterday as well. That was
no. Listen, you're dealing with some crazy stuff right now. We all deal with crazy stuff. It's no big deal. All right, so right now we see that so far, what has Asia done? It went short and retraced the whole thing, and then broke the midline right here at 2 o'clock. London is going long and is staying true so far. Those are the things that we know that have happened, right? And so if we know those things have happened, we can account for them for our projection-based probabilities, right?
Can you double check something for me on your
Mhm.
chart? I don't have a break of Asia mid at 2. It fell short.
Yeah, we definitely broke it.
Yeah, I can see it on yours. Why is that the fucking
Are
different?
you using DR stuff? So remember, DR calculates completely different, right? This is all I care about, and the
Yes.
data I collected was from the high to low,
Yeah.
not the 5-minute close, not any of that. It's just high to low.
My hands up.
Right?
Yeah.
We breached it.
Yeah. No worries.
Does that make sense? Because that's what the discrepancy is.
Yeah. And I can see it quite clearly now. Yeah.
All right. So we're not going to put in ADR mid broke at between 3 and 9:30, and ODR mid broke between 8:30 and 9:30. That's okay, right? We'll just use the 3 variables right now. Asia was short, false, mid broken, and London long and true for now, because we're nowhere near the mid. It can come back. That'll be a scenario that we factor in. So let's write out our scenarios. 2 scenarios. Scenario 1 is that we cannot break London's low, right? Scenario, and then we'll have 9:30 to 10:30 above London low, engulfing London below London's high, right? So the probabilities that were above London's low between 9:30, this low right here, between 9:30 and 10:30, 44, 11, 55, 55, 64. 64%. All right, engulfing London has a 19%. And below London's high from the 9:30 to 10:30 right here, this high right here, 6, 5, 11, 11, 5, 16. And that's if we stay above London's low between now and 8:30. Right?
Yeah.
This part of the session comes from DR, right? They did the hard work and collected the data for this. They have the databases for this. Like, you got two options if you want this database. Well, you got three options, right? Me and Coach are currently redoing all of our calculations, right, for what qualifies it. I get it. Everybody tells me that this is the DR right here, and this is the kill zone from this to this, right? And ICT community says this is the kill zone. DR community says this is the session. I'm just going to use my own data and define it, and I'm going to let data speak and not educators speak, right? So you can wait for me to build a database off of the highest probable time of consolidation and retracement reversals and the highest probability extension time, or you can go pay for DR, which is nothing wrong with that. It's a great data provider, and he provides some of the best intraday data ever. All right. Or what's the other option? You can go collect it your damn self, which is a great option and the best option that you can do. Right, is to collect your own data. Right. So those are your three options to do this step. All right. Scenario 2. Oh yeah. What is the scenario?
Willow.
Oh, right now the 10:30. Right. The 10:30 on is got a bias of 53 to 39% short. So 53% short. All right, scenario 2 is that you?
Yeah, sorry.
Oh, okay. No worries. I was like, what the crap? Where's Tinkerbell at?
I need to change that. We'll switch
Okay.
it off. We're talking.
So scenario 2 is that we break this London low by 8:30.
Yeah.
All right.
Yeah.
And so 9:30 to 10:30 above London low, engulfing London above below London low, above London high. Right, so let me switch to this.
Short, false, true. Long.
All right, so now we have engulfing London. It has a 35%.
Yeah.
We have below London high, 26.
42.
36. Yep, 42. Let me use my brain real quick. We're talking about below London high. Okay, cool. I was like, what the heck?
Yeah.
And then above London low, 13, 6, so 2, 4, 6, 19, 19, 21. 21%. All right. And since the market currently is saying, hey, guess what? we're going long. We're going to reset that. Oh yeah. After 10:30
short
is 50%.
Yeah.
Yeah, it's 50-50. 48 versus 45. So
Yeah.
I'm going to put 50-50, right? So now what we know is everything that we do has alerts and confirmations, right? You heard his bell go off. That's an alert, right? That to expect something, right? And so what I use these London and Asia midlines for, number one, they're alerts to tell me that probabilities across the day are about to shift, right?
Yeah.
And then the confirmation would be like London low, London high, based off the scenario, right? So that's London was Asia right there. So right here, like if we hit this London OU line, this is an alert for me to say, hey, the confirmation is here, but if we break this London low, all these probabilities shift to scenario 2, right? If we breach this Asia OU line right here, the probabilities are shifting in support of scenario 1, right? So now we're going to put on the VET. We're going to continue putting our projection-based probabilities on, right? So right now, why is this not updating? Right now, we can see that this is false, right? That the average weekly range is 1,029 over the last 8 weeks. We're at 585. That's completely false because, oh yeah, I guess it's not false. What? So we did move 585. The percentage, wow, yeah, like what?
Yeah.
We only have 56% of the average weekly range. What is going on this morning? A flash flood. Okay, where use an umbrella. Good grief. Okay, so now we're going to adjust our weekly range. So the last 2 weeks, the average weekly range was 931. The 3 weeks was 1,068. Last average 4 weeks was 978. Average 5 weeks was 882. 6 weeks was 930. 7 weeks 986. 8 weeks 1029. Boys, y'all should just never mind. I can't say that. I'm under investigation for that kind of stuff. But like we have 50% of the range left. All right. So you and some critical thinking, you know, like we can expect for it to move up or down and put some more range in. All right. Will you read off the probabilities of long true? So I can just type them in.
Long true London. Just changing that to true.
Make sure that Asia mid is broken.
Yeah, I've got Asia mid broken between 2 and 3, as we talked about. Short false up there. Okay, so we have, whenever you're ready.
1 minute. I'm not ready.
Okay.
I'm a hot mess today.
It's Friday.
It is Friday. First one's going to be +1. Let me finish this.
Yeah.
All right, I'm ready.
98%.
98% for 2043. All right, next one. Let me type in the numbers real quick. 442. All right, what's the percentage for 2.5?
86%. 86. 86.
All right. Wait, do we have PCE today?
Let's have a look. Bear with. Don't think so. No. Oh, yes, we do. Oh, right.
That's why we're at such a low weekly range. No wonder. All right, what's the 5?
The 5, 74, 74.
Wow. PC's gonna do some fun stuff today. And then
54 for 8.
okay.
Oh, stop it.
I swear I think of Peter Pan every time.
Yeah,
Okay,
it's just
can you give me the -5?
-5 based off the same setting because the
Yep.
scenario. Okay, that would be 41%.
And then the -8?
25%.
Okay, in the average daily range, we've hit 50% of that, so it's 286. We've hit 146. So let's walk through these two scenarios real quick. Right? So we have these probabilities on here, right? And we know that these two pink lines are alerts and confirmations of what to expect, right? We know that if we come down and breach this London midline, that is the alert that all these probabilities are going to shift to scenario 2.
Yeah. Yeah.
And then that would mean that these probabilities that we just put in would pretty much, I'm not going to say exactly flip-flop from being higher probabilities up here to higher probabilities down here, but they would definitely shift too. But since I'm not on call all the time, I just in your mind know that if we get the alert and the confirmation of this, we can expect these probabilities to increase, these ones to decrease, and then for us to net around the 41, 2004-1 if we expect to close the week higher, right? But because it is PCE, you know, she can do a lot of things, but I don't think it's that big of a deal in the current market condition. All right, so now let's put in our average daily range. Put in the VET back on. We can see that the average daily range is 286. And instead of confusing people, I'm just going to use the percentile that I mark out. So 1.35%.
Yeah.
We can see that I need to change the time frame because we don't need that far back. Oh yeah, we're already there. Fridays from 4 to 8 over this quarter's Fridays, 4 to 8 on average moves 0.41%. We can see that
8 to 12
moves 1.28%. And that 12 to 16 moves 0.85.
0.85, yeah.
So now you can turn that up back off. Oh yeah, real quick. Turning this back on, we can see which standard deviations fall within our daily range and our weekly range, right? And then the other side touch, if one's touched, what's the probability of the other side being touched, and so forth and so forth in the next touch. So we're at the -1. We can see that there's a 92% probability that we come down and touch the 2.5. And there's an 86% probability that the next move is up to the 1. All right, so now let's plant this. the average 10-day range right there. 4 to 8 right now is right there. So we got to move just a little bit higher to the Asian mid to fulfill this, or we need to move a little bit low, right, to fulfill that, right? We know that PCE is going to come out. And when PCE comes out, it's going to rip everybody's faces off in a direction. Because it's inflationary. Like, actually, now that it is not a number of interest, right, it can be two directional. But usually when it's a number of interest, like last year, inflation was the big number that everybody paid attention to. Well, we've already seen through inflation expectations in the bond market that inflation is not a number that we're paying attention to right now. Jobs and real estate numbers are. So usually whatever the news catalyst that everybody's talking about, those ones will be one directional, right? Look it up, this data. The new, once they are supporting information, which is always changing, what matters on the red folder flag is always changing based off the economic cycle regiment you're in and the business cycle you're in, right? So one part of the economic cycle or regiment cares about the inflationary number. So every single thing out there that has to do with inflation, those things will, when the news catalyst hits, right, it'll go one directional, right? If it's something that's iffy or a supporting news catalyst, like it has the probability of going up two directional, right? So it makes a move and then moves in another direction and then moves in the real direction, right? And so that, I know a lot of people try to say CPI will always be one directional when the news comes out. Yes, it can be, but data shows us when inflation doesn't matter, it's more of a two directional move, right? So I guess that's a good thing to have in the back of your mind. For me, I don't care. I just trade mechanical systems and just let them trade.
Yeah.
So we know that right now, settlement's right here. And we know that we have to place our 930 to 1030 box. Right there. And if we look at the two possible scenarios, we're going to go with above London low. All right. So we're going to put our 930 to 1030 on settlement at the low. Let me move it in place. Move this in place. And then we know that we have structure stat 1 right here, right? And so we know that we still haven't put, well, I mean, I guess we could say that this is destruction to the downside, right? Remember, when looking for the low of the day, it's like a bell-shaped curve.
Yeah.
Right? So like, we think about how a bell-shaped curve forms. Like that's just a shitty version of the bell-shaped curve. And these tail events, these black swan events are pretty, this is extreme. So let's redo that. You can't have, there we go. We'll have tail events to the upside.
Yeah.
Right? So like if you think of this, if this is what the average of the distribution is, right? And everything has a bell-shaped curve to it, right? Everything. The rate of change has a bell-shaped curve. The price has a bell-shaped curve. Every scenario you can think of, you can build one of these on, right? So right now we're doing the low of the day, right? The low of the day goes to the low of the day and then instantly recovers back to the mean, right? And if you want to see it fancy, how do I make this? How can I rotate this? I guess I'm going to have to draw it, right? If you think of the market like this,
yeah,
right?
Yeah.
If you see our market profile chart,
Yeah.
right, we know that through time when we made the low of the day or the high of the day, and you can look on your charts, majority of the time it was a destruction to the downside with an instant recovery back to the mean. It looks like an octopus, yeah. So when I look to see, did we make the low of the day or the high of the day? Is there this signature right here? Unless, so another scenario, right, we got to realize is that, you know, right, let's say what closing, like if we look back on the daily chart, on this chart right here, right, what do you notice about the close prices? Close prices. Majority of the time, they're towards the direction that they're going. So close prices here.
Yeah.
But the low, like in this case, the low of the day, that destruction that I'm talking about is in the daily chart wicks, right?
Yes.
So like this day, we came down, we did the destruction, and we instantly closed towards that high of the day. When thinking about the daily candle like that, right? And if I drew this profile from a statistical standpoint or volume standpoint, or like market profile uses time and price, right? Looking at this, right? What do you think the close is, and where do you think the other side, the false move, the wick of the day is, right? So what are you looking at this? The death and destruction happened to the upside.
Yeah.
So this is probably the high of the day scenario, and
Yeah.
this is probably the low of the day close, right? Because the majority of the time and price was in this area right here, and we closed off of it, right?
It's
This moved to the, huh?
Sorry, I was just going to add something, Mickey. That bulge is kind of like the body of the candle, right?
Yes, that's exactly what it is.
Yeah.
Right? So if we think of the bell-shaped curve, the bell shape of the daily time, price, and volume, right? This would be the low of the day, and this would be the close up here because it's associated with the most time and volume, aka the body of the candle, right? This hopefully this makes sense. I probably just confused the ever-loving crap out of everybody.
Well, we got a flying saucer and an octopus on the screen.
Exactly. So right now, we know based off of our system, you know, right here being above NFP Friday, previous month 50%, we're looking for the low of the day between 5 and 11, right? So we're thinking, like, is the current low enough? Like, did it happen in a destructive and instant recovery form, right, for this? And right here you can see death and destruction, instant recovery. But we have this stat right here that we have to be very aware of, right? That has a 79% probability, right? And that can happen between now and 8:30, and then PCE can come up or PCE can come down, make the low of the day, and then recover higher, right? All right, so hopefully that made sense, and you know,
good session.
We got to put our gap on right there. I'll put this more on the chart around the 9:30. Where's my 9:30? Right here. Okay, before we end this, I do want to talk about the afternoons. All right, so let's put our fib where the current price is. So at 9:30, you know exactly probabilities. All right, so let's think about this. All right, we know that more than likely the PCE data is going to make the low of the day or the high of the day based off the news catalyst that it is, right? And so for the afternoon sessions, and we know that we still have 50% of the weekly range unaccounted for, right? And so it's unlike yesterday where we projected this move to happen extremely to the downside between 8 and 12, specifically at that 9:30 time frame. And we're not going to expect a 500 handle recovery like we did yesterday. which was stupid and a mistake on my behalf, right? We need to start learning how to scenario build off of that 12 to 1600 using statistics, and that's something that me and Costa will be working on. So at 5 o'clock in the morning, we're placing this 12 to 1600 candle. Right now, we do have some scenario build to it. If you look at this right here, 53% short versus a 50-50, right? That's the first attempt at it, right? Knowing what we do, knowing what scenario played out from the 9:30 to 10:30, and knowing like what the probability of the 10:30 on is. However, the problem with that is, like I say, the farther you project into the future using statistics, the more error there's going to be off of that initial projection, because variables are happening throughout the day to shift their probabilities. Right. So me and Costa will be working on some different projects to backtest to get this range bar placed in the proper, because as you notice, like the majority of the times I get all the way until 1300 correct, right? And then the 1300 is where it starts shifting off, right? Based off of that, and now we're going to do some advanced studying and testing to get this part right. Because I neglected the 12 to 1600 because I don't really trade it, and oh my gosh, it's my work phone. And it's an Apple, and I never use it, and I don't know how to turn that stupid thing off. Whatever. If I find it, I might break it. All right. So yeah, so that's in the works, and like I have, to be honest, I've neglected the 12 to 1600 from a probability standpoint because I don't really trade it, and that's that. But that's something that we can look forward to coming up in the next quarter, and we'll go from there. All right. Any questions? Fridays had the highest probability of making the high 40% or the low 24%. It is the highest probability that, yeah, absolutely. Let's look at that real quick. I don't know if he's released it to the public yet, but if we go to this TFO indicator, let's go to the 1 hour chart and talk about what Jerry's talking about. And we put in historical weekly profiles, historical weekly tables, right? We can see that Friday has a 67% probability of putting the high of the weekend, right? And that's not even including, what day did we say the low of the week happened? We said the low of the week happened on the Tuesday at 10:30. All right, let's keep that in there.
How does it shift? Ah.
And so right now, we get these Monte Carloses, these live Monte Carloses. Let me remove all drawings, right? These are the 3 highest probable, weekly profiles based off of, I want to say he uses like a moving average. Let's see, average range levels. Yeah, it looks like a moving similarity baseline is based off of a 20 closed moving average, closest profiles with whatever, right? So he took the 20 moving average and he synced it to a time in the week, and then whichever one was closest to it is, let's put that on a 10 since I'm on an hour chart. Let's put that on a 5, right? And these would be the 3 highest probable. I don't even know if that changed.
I don't think it did.
Let's do a 3. Nope, it didn't change. Let's do a 5, 10, 15, 20. Let's do 100. Nothing. Let's do a 1. Nothing. Okay, we can see that March 28th, 2021
was that one,
was a similar one. August 1st, 21 January 21st, 24 were the closest to the weekly profiles of following this weekly profiles out there, right? And one thing I'm working with him right now is to do weekly standard deviations to synchronize with these weekly profiles. I think that'd be pretty cool.
Yeah.
And if we put on more weeks, let's go 5, 6, 7, 8, 7, the last 7 closest profiles, you can see that this one has a good resemblance of what happened Thursday. Like we moved down.
Yes.
You can see that this pink one right here has a complete negative stimulus. So this one is not correct. We can see that this one right here had a similar profile and such. And let me go back. Let's take some of this off. Let's go to 5. We can see that not many of these weekly profiles showed the signature of what Thursday did besides this one right here. And it was like a scoop recovery, didn't make a new high of the week, at the high of the week. Because remember, just like on the day,
And that
weeklies destroy and instant recover as well. So there's a possibility that Thursday was the high of the week. And, there's a 40% probability of that over the last 5 weekly profiles that come closest. So out of these 5 that follow the similar characteristics of what we've done so far this week, majority of them made that weekly high of the week on a Thursday and made the low of the week on a Tuesday, which we know because I manually put that in. So yeah, so let's mess with the daily profile a little bit.
daily might be interesting because obviously today is a news day, and I wonder. Oh, you look at it. Yeah.
Let's go to a 5. Let's go to 15 minutes. We can see it more. What is all this? He updated the script. Oh, these are those things he was telling me about that he's working on. Don't ask me what the hell any of this is. I just know lines. I'm an amateur dude. There it is.
Yeah.
So look at this blue right here. Oh, come back. Oh, it's shifting as price is moving. That's what's happening. Okay. So there's one that came down and wiped out the 12-hour low right here and then rocketed higher. Right? That's essentially what I'm saying. There it is, right there. And then rockets higher. So taking out the 12-hour low, right? Structure stat 1, and then rips higher. This is what I'm expecting too. And our analysis, if I put the draw lines back on, show that kind of movement as well. So now we have 2 confirming thought processes that does it. So that means this would be like that.
Yeah.
But we haven't got the alert or confirmation for this because remember, that's why we have these OU lines, right? Did we breach the London midpoint? So no, we haven't. So until we do that, there's no alert for that actually happening. And the confirmation would be right here at structure stat 2. All right, TFO weekly using 30 minutes. Wait. Let me read up on Jay. Profitable losers in the house. Oh my goodness. Listen, are you still there, profitable loser? That's a good man right there. Like, I don't give a shit what anybody says about him. That is a good dude. All right. So with that being said, though, it is time for me to jump off. Thanks for jumping in, profitable. I don't know why I'm raising my voice like he can hear me any better. Thanks for jumping in, profitable loser. Like, it's such a blessing to have you in. And thank you all for joining. Let me catch up on the chat. He did release it for the public. Cool. Weekly profiles TFO. I'm using a 30-minute chart, 89 measurements. Let's go to a 30-minute chart. See what he's talking about. I don't feel like doing it right now. All right, guys, I am going to jump. Shag Nasty, have a great weekend, man. All right, hopefully this was helpful. Have a great weekend. Remember, You know, like I probably should come up with a cliche saying that everybody has these cliche sayings that they use, and mine is just don't fall for the fucking scammers.
That's good enough.
Like, have fun bare knuckle fist fighting the markets later. Hey, if you get time today, no pressure, or over the weekend, let me know. All right, my weekend is pretty slammed right now, but just let me know if you want to jump on a call and work on these daily boxes and probabilities.
Yep, I will.
You're the man. Jerry and everybody in Florida, be safe.